Hi, I'm Gwen Preston of Resource Maven. This is part 2 on a short video series on managing risk with mining investments. Okay, so this is part 2. In part 1, I talked about aligning your entry and exit points with macro goings on in the sector, whether that's cycles, whether that's events. You have to make sure that you enter and exit in ways that make sense with what's going on with the sector in the big picture. Today I want to talk about managing risk. And specifically, I want to talk about what to do with share price moves. I think a good way to preface this discussion is with an example. Earlier this year, I recommended in the newsletter and bought a stock called Arizona Silver. Arizona is exploring the Ramsey project. Ramsey was a historic mine that 100 years ago tapped into some really high-grade silver in, well, Arizona, as the name suggests. The idea for Arizona Silver was that the Ramsey mine had been truncated by a fault, and that fault had moved the extension of the vein up to the north. The idea was the northern part hadn't been discovered, it was undercover, nobody had looked for it. They did some work, and there was good reason to believe that this theory made sense, that because of geophysics and geologic data, maybe that northern extension was up there. It was a great idea. I visited the project, I got excited. In the Maven letter, we entered at 30 cents. I think that was back in March or April. So then Arizona Silver got out there. They started drilling into that northern target, testing this whole theory. They announced a description of what the rocks looked like, and the rocks looked great. It looked like exactly the kind of material that you wanted for this theory to work. The stock soared. It went as high as $1.20. That was before there were any actual assays from this drilling. Unfortunately, when the assays did come in, it was a disappointment. There was basically no silver in the system. The rocks were of the right kind, but they didn't carry the mineralization. The stock then, of course, fell right back down to where it had started, back down to 30 cents. I tell this story because when the stock was in its upward trajectory, its crazy speculation on what might be, we took our capital off the table. Whatever money you'd put on, if you're given a triple on drill speculation, you should take that money back. This is part of managing risk. We all want our bets to work. You know, you read a geologic story, you talk to a company, you decide that this has a good chance of being, and you put your money into it. But you have to keep a cool head. The fact of the matter is that exploration success, like real success, is far less common than we all want to believe. So, if the market gets excited about a story, if investors pour into a story, whether because of a good promotion effort, whether because there's a visual description of a drill result, whether sampling has pulled some really high grades from surface, whatever the reason might be, if this market gets excited about a stock and gives it a real run-up, but just based on speculation, take that run and leave. There's other opportunities where you need to take your money and leave as well. And I don't mean leave completely. You can just take your initial capital off the table and play with the house's money. Say there's a takeover bid for a company that you own. Maybe you believe that the takeover bid isn't quite high enough. Maybe you think that another bid is going to come, but I would say use that price move to take some of your money off of the table because there's no guarantees in this sector. If a company does drill and release one really exciting new assay that shoots the stock upwards into a new discovery, that's great, but I would take some of your money off the table because the market almost always cools with subsequent results. They're easily disappointed, mining investors. So the point is, don't get stuck on a story. We all want success. It's great to participate in success, but if you're given the opportunity, take your initial capital off the table and play with the house's money because it's just the smart thing to do.